All right, what's going on, everybody? Got another market recap. This is actually from yesterday's trading, Wednesday, January 15th. So we had CPI at 8:30 this day. I ended up trading the New York session, which for beginners, I don't really recommend because it can be choppy. And this is pretty much what we saw throughout this day. So a lot of break evens, had 3 break evens, 2 small losses for a grand total of around negative 320 across 10 accounts. So about $3,200 in losses for this day. So let's go over these trades, go over this session, why I ended up taking them, and also what we could have done better to adapt to these current market environments a little bit better. To do that, let's go ahead and rewind. We'll rewind all the way back to the beginning of my session, and I'm also going to give you guys kind of a higher time frame analysis as well. So on the daily time frame, you can see we have been working bearish. We broke structure here, and ever since then, we've just been retracing, dumping, retracing, dumping. We were obviously much lower in this fair value gap when our session started, but I was anticipating us to work further into this gap and either dump from there or continue through and reach for this order block mean threshold, this fair value gap, and then we also have a daily volume imbalance. Dropping down to the 4-hour, we had a lot of 4-hour bearish order blocks. We had this one here, and we also had this one over here. So I was thinking we may stay under this order block, but if we end up trading through it, which we were at the start of my session, we would probably draw to the next order block, draw to this high, the midpoint of the wick, and if we can get through all of these areas, maybe even up to that daily fair value gap. So let's drop down into the 1-hour as well. You can see CPI really did a huge bullish move. So we had a big news candle. Typically, when I do see these news candles, I don't really like to trade the price action because one, price usually doesn't end up retracing back into any imbalances, any fair value gaps that the news candle creates. And if we end up continuing the trend, we really don't have any other choice but to buy from a premium. And I'm the type of trader who always likes to buy from a discount, so these environments are a little less favorable in terms of my strategy. So 1-hour, I just basically saw it pumping. We were making some motion over this 4-hour order block and mean threshold, so I figured we would probably continue pumping up if all kept looking bullish. Dropping down to the 15, you can see a little bit more detail. We had that 4-hour inverted fair value gap, which at the moment wasn't currently an inverted gap. The 4-hour closed around 10 a.m. So over here, it would be an inverted fair value gap, but nonetheless had the 15-minute fair value gap here. We ended up reaching down into this, not quite the midpoint, but we started to reject and price back up and respect the top side of that 4-hour order block, which is now a breaker block. So let's go ahead and drop down to the lower time frame now so we can go ahead and see everything play out with that context. So we have the 1 minute here. You see we drop down into that 4-hour inverted fair value gap where we get some rejection. Now, when I was seeing this, I was thinking we might want to drop further down into the 15-minute fair value gap because we sometimes want to reach for a discount, but I also knew because of the news candle, we might not end up reaching back down there. There was no other 15-minute PD array or fair value gap to tee off of. That's one of the main reasons why I didn't take this off of the 4-hour fair value gap because we hadn't closed above it yet. So it still could reject under this order block, under this fair value gap, under this mean threshold on the 4-hour chart. We could still reject it and close under and then go down. So even though this looked really good with this 1 minute inversion fair value gap, we would have been buying this right up into that 4-hour order block. So I wanted to be cautious. This did end up playing out, but I was not a part of it simply because I wanted to see us get above that mean threshold again. We ended up doing that right here. So I ended up jumping in right around this candle. I saw us retrace down here to tap some of this order block, some of the wicks of that order block, and we also swept a low, closed bullish. So I went ahead and hopped in because I saw this as a protected low with a breakaway fair value gap. So I got in that position. It ended up going in my favor here, and then I actually ended up breaking my stop at break even after this displacement And you see that we actually come down and stop me out at slight profit slash break even. So first trade of the day stopped out at break even. And it is interesting because if I wanted to be a little more risky, I could have left my stop loss below the order block candle low, but it still would have stopped me out here. So either case, we would have probably been out of this trade unless we just left the stop down here, which after breaking the structure here, I wouldn't have been wanting to do. Either the case, this ended up playing out, goes a little bit further, and we go ahead and create another displacement leg with a 1 minute fair value gap, and you can see that being created right there. I was actually looking at this trade, and as soon as it reached into the fair value gap, I was just looking for a reaction. Now, the stop that I should have had was probably down here to be a little bit more safe. That was one of the things I failed to do today, was adapt to the conditions. Obviously, it was wanting to retrace back a lot. So that being, I should have had a more conservative stop loss instead of trying to get a tight 30-second stop. But you'll see my stop loss on the 30-second and it'll make more sense. But this one ends up going here, just barely getting me in and then stopping me out like directly afterwards. And if you look at the way this trade plays out, it actually ends up playing all the way out to this high. So I could have made money on this trade and this trade if I wouldn't have closed this one at break even. But in both scenarios, I either had too tight of a stop in this one because I was trying to choke the stop, or I just got scared out of the position too early because we were failing to break the highs on all of these candles. And at that point, usually would just rather be out of a trade. So the choppiness of today's conditions were clear after this trade. And then especially after these trades up here, it was clear that we were going to have a little bit choppier of delivery, because typically you would see a move like this just draw right to that order block and then either surpass it or start to reverse right away. Either case, these entries were still pretty premium. Anything after maybe this second stage of distribution wasn't such a good idea. Still made it out with about an $86 loss on this one, and then of course on this one, small profit slash break even, and then we finally touch this 4-hour order block. So let's see what happens here. I'm actually going to drop down to the 30-second though, just so you guys can see the little entry areas that I had. Since I didn't want to have my stop down here for the 1 minute fair value gap, I thought it'd be a good idea to put it under here after we started to trade up from the 30-second fair value gap. So I put it under that fair value gap candle, and it just ended up wicking me out there and then starting to run. And then on this one right here, I got in on this order block, which was also on the 1 minute, and it just did not play out quick enough for me. I would have rather seen this fair value gap get inverted here. Nice run up, or at least some support right here, but we didn't, so I would have rather been out at break even, closed at a small profit, and that was that trade. Now back to this next trade here, we touch into that 4-hour order block and we create a fair value gap. And at this point I'm thinking, okay, if we can invert that, that'll be a nice fair value gap to sell off of. And in conditions like this, it is smarter to wait for 4-hour levels or at least 1-hour levels to tee off of, because a lot of times even the 15-minute or the 5-minute or the 1-minute levels don't really get respected. And we see this in some of the choppiness here. A lot of order blocks didn't get respected and a lot of fair value gaps didn't get respected. So had that inversion, perfect textbook setup, decided to jump in that. And right off the bat, typically this would be a setup where we'd get really nice delivery, just like straight down, real heavy delivery. But as you're going to see here, it gives us a lot of back and forth right off the jump. So a lot of close calls right to the stop, but ultimately we're still respecting the midpoint of that inverted gap. So I continued holding. We got in some profit. And of course, after holding through all of this, I wanted to be break even as soon as possible. So as soon as we started to get some displacement, I ended up moving my stop to break even. I think around here I moved to break even, and the next candle comes up and stops me out at a small profit slash break even. So it is very interesting typically this would be an area, right, where after this, you would not see this come back up. We did have a 15-minute fair value gap below here, but with the 4-hour narrative and with the premium we were at, usually you would not see that type of retracement. But in this case, we get stopped out at break even. And as you're going to see, this position, if we would have left our stop up here the whole time, it would have actually played out and we reached all the way down into this fair value gap. So a little bit more patience on this one, a little bit more willingness to hold would have probably done me well. I could have also just left my stop loss here instead of break even. But after all of these wicks, right by your stop loss, right by your entry, you're going to want to be break even too as soon as possible. So I don't even think I would have wanted to hold this at all. I would have probably wanted to be out at break even. And right after that, I got to be honest, this was kind of a chase. I was getting a little frustrated after all the break evens, after all the back and forth, and I really wasn't adapting my strategy quick enough to the conditions. Several times I could have had like a 1 to 1.5, a slight 1 to 1. What would that be? 1 to 1.5. And then on this one right here, somewhere around here for like a 1.5, 1 to 6, 1 to 7, give or take. But you see, there were plenty of opportunities for me to at least squeeze a good $700 or so, $500 or so, even 3 or 4 out of each of these 10 accounts. The problem was, usually I take a 1 to 2 TP1 and then hold for a runner, and usually I break even my stop after the first or second displacement. But after 1, 2, 3 times of that not working, because I didn't adapt my strategy, adapt my style, because I was kind of getting frustrated, I ended up just making the same mistakes. So you do have to be adaptable in these conditions, or just do not trade, or just be super picky with your setups. So these two were probably junk setups. This one would have been better if I would have just held it, and then this one here was good. This one here was valid, but we had this 4-hour order block that we were buying into, so this was a junk setup as well, although we still technically got a 2022 model, because as you can see, market structure shift right there, come back into the fair value gap, and usually you would see that deliver off a 2022 model, but because we were at this 4-hour, we already had the sell program kicked in. This market structure shift really did not play out the way that a 2022 model usually does. The better move would have just been to stay in this position, or just to not take this one at all after this break even. But we got a little bit eager. Choppy delivery. If you were sitting through this, I actually kind of feel bad for you, but it eventually does get there. So you see it gets down to that target, and then I think by the afternoon session, it gets even further. Nonetheless, that IFEG setup ended up playing out nicely. Very good example of high resistance liquidity. If you want to put this in your journal under high resistance liquidity and what it looks like, this would be it. And there was also just a lot of back and forth price within these areas. Very back and forth here. And then on the 5-minute, you could see a lot of side-by-side candles. So whenever you see that, or whenever you see the 1 minute, just be very give and take, very back and forth, be cautious and act accordingly. So smaller targets, stop losses, be a little bit more conservative, and use half the risk. That way, like me, if you end up being at a break even or a small losing day, at least you don't dip into your profits too much and not allowing yourself to get chopped up in these markets. So there is a safe way to trade them. There is a way to still make money in this, but if you're a beginner, it's pretty obvious why you should avoid a day like this, because it can make you feel like you're a bad trader when in reality, you might just be a beginner. That is all for this market recap, guys. We are going to continue the live streams, the Discord, everything is growing. So if you're not in the free Discord, link in description, and watch me trade live for free here on YouTube every day at 9:30 Eastern. Appreciate you guys watching, and I will see you in the next one.